Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for the segment, we have Dave Donovan, Executive Vice President of Financial Services at Publicis Sapient. We're going to take a look at financial earnings for the second quarter, as well as get into some decentralized finance, or what we call DeFi. Dave, it's great to see you as always. Welcome back to Trade Talks.
Great to see you as well, Jill. Happy Friday.
Oh, yeah, happy Friday indeed. And give us a recap of bank earnings and some of the trends that you saw for the second quarter.
So a couple points in regards to our large money centers. I thought for the most part, the bank earnings were very modest. We didn't see a lot of revenue growth. I felt like they made their numbers by releasing past reserves, although I thought Goldman Sachs had a great quarter. They showed accelerating growth, and that plays right into their large business strategy. I think the bigger problem for banks long term is low interest rates, lots of deposits, but not putting the money to work. So the loan growth was very muted. And I think that's going to be something that needs to be watched as we look into further quarters as to how banks are going to revive organic growth.
And when you talk about Goldman Sachs's quarter, what outperformed there? Was it investment banking with the level of new issues that we've seen this year? Where did they see outperformance?
Sure. Investment banking was of course strong with many of the IPOs that came in the quarter, but they also saw growth across all their business segments. They saw growth in asset management. They saw growth in their consumer division. They saw growth in capital markets. And it's a great story, and I think it's getting a lot better. You look at the market cap of Goldman Sachs, I think it's around 130 billion, and when you compare that against some of their sort of competitors like JP Morgan or Bank of America, who I think JP Morgan's like 400 billion and Bank of America is like 300 billion. Either one of two things is out of sync. Either Goldman Sachs is dramatically undervalued or the other two are overvalued. So I'm not sure how that's going to play out, but I would bet that Goldman is probably a little bit undervalued and they're not getting the valuation that they should be getting as really a tech company that does finance.
So Dave, when we talk about growth and we talk about being competitive, the growth in decentralized finance and all these new fintech players that are challenging these larger money centers in a number of their verticals, are banks going to be able to compete with all of these new outliers and disruptors that are coming in?
It certainly is going to be a paradox for them. It's funny, when you asked me about bank earnings, what else was I excited about with financial services type companies? I certainly was very excited with Square, and I was very excited with Coinbase, two companies that I thought had tremendously, their quarters were incredible. Coinbase alone, had $2 billion in revenue, 50% margins, just blew away every metric. And the same with Square, just incredible earnings growth. And when you look at these companies, and they essentially, to me, remind me of like new finance, and their business strategy, their forward business strategy going forward is with Coinbase. Obviously, it's the on ramp to all things crypto, and the same with Square. And you saw Square with their acquisition of Afterpay. That's only going to create a much more robust ecosystem around payments and around this idea of having a platform where merchants, buyers and sellers can come together and transact. And we've already heard Jack Dorsey in public talking about how he's all in on crypto and how he really they've already created a company called TBD and how they're going to push this idea of when you think about DeFi is really money over IP. So in the early 90s, who would have thought that a phone call would be free? And then all of a sudden it was. And that's really the opportunity with DeFi and with DApp. DApp being decentralized applications, because it's not just a financial, it's not just going to affect finance, it's going to affect all aspects of industry. But whether it be DeFi or DApp, these protocols are going to be the new way that companies transact with each other, and it's you're going to have better security, you're going to have costless verification, and you're going to be able to reach a larger user base at a much lower cost over time, and the network will be much more efficient.
Right, and it makes you wonder with the money center banks, the legacy banks, if you will, are they behind the curve when it comes to integrating more fintech into their legacy platforms? Because these companies are already out there, they exist. And even when you think about the revenue stream that they get from fees and so forth, I mean, are they at peak fees? You have all these newer fintech bank companies that are coming out that are advertising no fees, and they're trying to democratize access to consumers and not crush them with the amount of fees that banks can. So, I mean, consumers are going to gravitate there at some point.
Absolutely. And I think you saw a little of that with this infrastructure bill. So within the large infrastructure bill that just got passed, there was a piece of legislation devoted just to crypto. And it goes to show you how Congress is very uneducated with how the markets work. And what was interesting is when they initially put the bill forward, they had a tax around proof of stake, which the way that they had written the legislation was not accurate with what is going on with DeFi. And they got a lot of blowback from just regular constituents. So they've actually made an amendment. And I kind of thought to myself, well, maybe the bank lobby was somewhat involved in that initially. But, look, I mean, banks are smart, and they certainly are well financed. They have plenty of capital. It really comes down to whether they want to evolve their business models. Clearly, DeFi challenges the status quo with swipe fees. It's going to create lower cost. And at the end of the day, that's what consumers want. They want more value for their services.
Yeah, well, it could be interesting to see what happens in this space when you think about M&A as legacy institutions might want to acquire versus having to organically develop this kind of technology. So that could be interesting when you think about it longer term in terms of where the opportunities are.
Yeah, and I think that's what JP Morgan is starting to look at and starting to execute on. They look like they're putting some investment into some of these fintechs that are public. You saw their acquisition to create a digital bank in the UK. And I think that they'll look to make some other smart acquisitions. I think what's interesting is when you look at the VC space, all the money is pouring into DeFi, everything. It's very exciting. It's a lot like the early 90s with the internet.
All right, Dave. Appreciate catching up with you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill. Have a great day.